I'm Vanessa Cole, co-founder of Cole Climb Builders, and our mission is to provide affordable new homes for families in need.
I'm Katrina Icasa, founder of Icasa Company, and our mission is to rehab homes for affordable home buyers.
We're friends, moms, entrepreneurs, and lovers of all things real estate.
By the way, we're both licensed realtors with a passion to educate on buying and investing in real estate.
Together, we have sold over $30 million in real estate, and our mission is to educate our listeners on buying, selling, and investing in real estate. Welcome to Housing Happy Hour. Welcome, everyone. Housing Happy Hour, episode 10. So we're super excited for today's episode. We are interviewing Mr. Bilal Aquil. And a little background about Bilal. He's not only our guest for today, but he's also been a mentor, specifically in my life, and has just been a great person to just be around and learn so much from. But Bilal is a father, a husband, a businessman, a real estate investor, and also the host of podcast Above the Noise.
That's right.
So make sure you guys check that out, and we'll put the link below. And we're just super excited. We're super excited to interview him specifically on real estate investment, because this is Housing Happy Hour. And just get to know a little bit more about how Bilal started, what kind of projects he has been working on over his career, what worked, what did not work, and where he is now. And hopefully some nuggets and takeaways that could help you guys who are aspiring real estate investors to take the next step. So let's start from the beginning, right? How did you get started in real estate?
So the year was 1997.
Yeah.
And I was out of school. Well, actually, I was out of high school, in college, and I lived in a duplex on I can get very specific. Can I be specific?
Sure.
Ben Street in Houston, Texas, and it was a street that had been basically kind of left kind of to the wolves, if you will.
Yes.
Mentor had bought up like about 10 homes on the street. And this is Ben's at 288.
Your mentor.
My mentor, yeah, he kind of bought up like 10 homes. And I was living in one of his duplexes, one floor of it. And, I just began to kind of talk to him. I was working at the YMCA lifeguarding, I'm talking to him. I'm thinking, okay, man, this guy, he owns 10 homes. And, I've always been the type of person that, believed in people. I thought to myself, okay, if this guy can do it.
Right.
That I can maybe not do 10, but maybe I can do 1. Maybe I'm 10% as good as this guy is. Right. And so I began to ask him and talk to him, hey, man, what's going on with this? And so he says, you know what, you want to help? Tell you what, you take that house, and because now I know he'd gotten kind of sort of over leveraged. He had 10 of these monstrosities, they built in 1930 to 40s and 50s, and there's a lot of work. So he said, you take that one and, you'll fix it up. And I thought, okay, fix it up. So I took my Discover card, took my credit card, got my Sears card, and did what I could. I go to there. Okay, we're going to do this. What happened was I was living on the first floor, and the top floor had a tenant on it as well. So what he did is sort of made me responsible for that tenant, and so the tenant would come and complain, and hey man, this roof needs some patches. So I'd go to him and I'd say, hey man, the roof. He said, okay, go buy some roof tiles in, get it going, and for that we worked out a deal on my rent where I would take a lesser rent, which to me was a profit center because I'm lifeguarding, right?
So did you take ownership of the property, or you were putting in sweat equity for a less amount of rent that you had to pay, so you can gain the knowledge?
That's it. Because I was 20 years old, I didn't really have the back. I didn't have somebody telling me, you do this, do that. I think I had enthusiasm. And I like the idea of it. You watch the infomercials back in my day, it was TV. Yeah, guys, but you're going to get rich in real estate. Yeah. You sit back at late night and you see a guy on for 2 hours say, and real estate's the way to go. Da, 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 da. You think, yeah, I got to get real estate. And for $4.99, you're going to get my book program. I think, man, I don't have $499. You know what I mean? But when I met this guy, I was thinking, okay, I don't have $4.99 to send this guy to LA for his book program, but I do know a guy who's on this street who's doing this. And so that'd be my $4.99. So to your point, so he would be considered my first mentor. Learned a lot of lessons, lost a lot of, money relative to the time in my life. Yes. But I didn't look at it as my life is over. And, I always knew, stuff happens, man. I mean, I'm trying something new. I've never done it before.
That's right.
Let's keep moving forward. And it wasn't the only thing that I was doing, which is also, I guess, and one of the lessons you learn is, when I say only thing I was doing, I still had a job kind of, yes. So it was something where I was, looking for it to supplement, to create passive income, because I always knew this, you always need multiple streams of income. Yes. Very important.
Yes. So what was your next step after this? After
that experience, real estate wise, I think I sort of need to take a little breather, because that was a year and a half or so of, a couple of years, and I was able to, and then I moved on to some other things, got into financial services. And I think my next real estate acquisition was just for private residence. Okay. Because I started, got married, had my first, 2 children. And I said, I need to go ahead and buy a house. You know what I mean? Yes. All the real estate, millions of infomercials, that's cool. Right now, I just need a place for, my babies, my wife and my babies, I got to represent. So I went out, I lived in Pearland, bought a home in Pearland. Good. It was all good and what have you. And from there, I decided, my wife and I decided, we kind of like the city life. I was kind of more of a city, I'd been accustomed to inside the loop, a little tighter, but I felt the culture, this was me. Yeah. So I said, we need to do something there. Showed my wife the house. I showed her, it was a house in kind of in Ward 3. And I was like, man, I know the house is different, but I promise you, this area is coming up, is gonna do something. Is I remember that, and so she's looking at it like, all right, babe, whatever, all right, that's cool, I get it.
This house was in 3rd Ward.
3rd Ward, Texas.
So for those who are listening and aren't familiar with 3rd Ward, it is I would say now a predominantly an historic area. A lot of the original homes are there, and it is an area that's being gentrified, or has been for some time.
Absolutely.
So
totally.
For a husband who is saying, hey, let's move our family to this area, and she's not from there,
right?
And you're seeing a lot of the original houses. I think at that time the crime rate might have been a little bit higher.
Absolutely.
It's not ideal for the wife. I just put it that way.
Exactly.
At that time,
right.
But you saw the potential, or I guess having your investor cap on,
where it was going to go,
of knowing,
go.
And so, how far back was that?
18 years, 19 years ago.
So I can only imagine, because now 3rd Ward, I mean, you have $400,000 homes. There's still specific pockets where it hasn't developed as much.
Right.
But the houses are 300, 400, 500,000.
Absolutely. No question.
Easily. The land alone.
Yeah.
60, 70, 80, some parcels 100,000 just for the land.
Exactly.
That's not even with the structure on it.
Right. And when I moved there were people, I remember one of my first experiences was on Alameda, in front of, I won't go into the names of the locations because everybody's listening is going to know. Very popular. Everyone would know where it is. But one of my first experiences was I saw a man being rolled over. He'd gotten in an altercation with the other guy on Alameda. And, they got into some fight or whatever. The guy ended up on the ground and the guy was rolling over him like we were in a movie. And I was thinking to myself, wow, this is serious.
Yeah.
Now, this was before my wife and I moved there. This is the 90s. This is circa 1900. This is the 1900s.
Same area.
1900s. And so you're like, okay. And so by, like you said, your point, 2003, 2004, that's when I moved in the area. And it was moving. It had some good momentum. It was moving in the right direction.
Starting to revitalize.
Starting to revitalize. You could see some little buds of green, if you will. It's like, okay, life is, it's not weird as it used to be. So that was a confidence builder.
Yes. And that's, I think that is something for a lot of people who are interested in real estate investing to consider, because when you are looking at areas that have potential, that have a vision, that there are some players in there making some things happen, that's typically where you're going to get the most bang for your buck, so to speak.
Absolutely.
Because a lot of people usually don't want to go in those areas.
Right.
But once the momentum builds
Mm-hmm.
and then the floodgates open, everybody's coming in, but you have positioned yourself as like the go-to investor in that area.
Right.
So it's something to consider for people who are interested in investing. And if you look at it from a long-term perspective, you can farm an area
Right.
and you could be that go-to person. So when you're getting thousands of letters to sell your house, they'll call you.
Yeah.
Most likely.
Absolutely.
And you can usually end up a better deal because they know you can close.
Right.
Because they know you have 5 properties in the area.
Exactly.
10 properties. But I just say that to say that certain areas that don't have all the flowers and the bells and the whistles, a lot of people back up from that. But I would encourage you to maybe just do a little bit due diligence, see what the market is doing, because the Third Ward is close to the medical center. It's so close to downtown.
Right.
I mean, it's just a prime little pocket.
Right.
And you got in before it rose. So you got
Right.
in at a lower cost.
Right.
And then, you're going to really profit off
Yeah.
the backside of it.
And there's still areas like that, in Houston and in LA and in Chicago and in New York. It's all about, like you said, recognizing the opportunity, looking at it. I know
Having the
you guys
vision.
have investments right now in certain areas that would be considered quote unquote low income, but that
Right.
was when
Right.
in the 90s that was considered low income. Now it's no longer considered low income, but you maybe, like I took a conservative route. I said, look, I'll move in. I'll take the risk. I'll be the first investor, right?
Right.
And to your point, Vanessa, you there, and then 2 years goes by, 3 years goes by, and all of a sudden you start saying, "Man, this is going up in value." The tax bill starts coming in, and you say,
Yeah.
"Taxes now, how much?" And then before you know it, you're thinking, "Wow, this is crazy." And then to your point, now you're getting letters in the mail. Now people are calling you. I get more phone calls now about people trying to buy my Third World real estate than people, the friends. You know what I mean?
Yeah.
I think, I was thinking that's a hotline. Hello. Yeah, I want to buy your property. Oh, man. Hey, you on that? Yeah. So, yeah.
Because
So,
that
yeah.
means you're in a hot area.
Right.
Absolutely.
You
That
bought
a lot of people
You bought a
weren't.
hot piece of meat.
There you go.
1993. Was
yeah.
1993?
Well, that was the first kind of the lessons were learned, like in 93.
okay.
But
2003.
through 03, yeah, that was when, 03, yeah.
So let's back up. So in 93, you invested sweat equity, your time, a
right.
little bit of your money.
Right, a little bit of money.
Just learning how to fix up a property, just kind of understanding the dynamics of how this whole thing works. Later on, you bought your personal residence. So what was next?
Then I began to, once I bought my personal residence, then at that point I started really getting aggressive with the, purchasing flips. And so I did several flips in Southwest Houston. And that was a time when, the system was kind of, you got to find a system, find a mentor. And there's systems today for that, but did a lot of flips out in Sugar Land, did some in Missouri City.
How'd those go?
They went well. They moved very quickly, because to your point, those are areas where people wanted to be. You got to find the right product, though. And I'm always looking at, from an investment standpoint, I'm looking at days on the market.
Right.
Because I'm not trying to tie myself up, my money up, my investors up. So I invest like this. It's 2 approaches you can do. Flips, a fast rolling nickel beats a slow rolling dime, or appreciation, which is more along the investing in the Third Ward in areas where you're talking about a capital appreciation.
Right.
You're not going to find a quote unquote steal, but those are more long-term investments. I saw the Missouri City and Sugar Land stuff as short-term investments because, to Vanessa's point, people want to live right next to the new HEB, the new schools, the great area. I mean,
The suburbs.
the
of
suburbs,
Houston.
yeah, the suburbs of Houston, man. That's where you want to be. You know what I mean? It's comfortable. You got elbow room. It's clean. It's
All the
it's
amenities.
beautiful. All the
Safe.
amenities. It's safe.
Yeah.
That's where you want to be. And so those are where I could flip. I can look at the days on it. I get with my realtor. She tells me, hey, okay, this area right here, this little quadrant, man, these homes are selling in 30 days. Like, cool. Is there one? Even if I profit 7 to 10 grand, if I don't lose, it's a good situation. Some of the deals I flipped were just to benefit the relationship with my lenders and with my bankers and with my brokers. So then they would come to me. Even if, for example, one deal, I did a deal with the broker. Maybe I broke even, didn't lose anything, didn't really make anything. But they kept coming to me and would show me deals prior to, hey, Bilal, this is that little deal. Before I email the rest of my little buyers, you want to jump on this?
Right.
Because they knew I would take action. I was enthusiastic, and I didn't have that fear. And I said, yeah, I'll do it.
That's good.
See,
that's
so
really
take it.
good, because a lot of people will sit on the fence. A lot of people won't make a move
Right.
until
Out of
they
fear.
know that out of fear, until they know like it is the perfect deal.
Right.
And
There's never a perfect
there's never
No.
a perfect deal.
No.
And to your point, I love that. Sometimes you just have to earn the sweat equity is really what you earn, and the relationships, the rapport.
Exactly.
And so now you're the go-to
Right.
person.
Exactly.
Right.
But you'll never be the go-to person if nobody sees you doing anything.
Right.
Yeah, you're not
Exactly.
taking any risks.
Right.
Right. Absolutely.
Right.
So when you were doing these flips, were you using private investor money? Were you using hard money lenders? How were you
Hard money
finding
lenders.
these deals?
Yeah, it was hard money lenders. So the hard money lenders, we know how they work. So the deal is based, the money is based on the deal.
Right.
And if you've gotten, a good relationship with your carpenters, your carpet guy, where your numbers are, then, the numbers work with a hard I did hard money because I never had planned on keeping the property. Yeah, the interest rate was super high. It could be even considered usurious, right? 13, 14, you tell people 13, 14, what the? But what I found is, as I've now 20 plus years of being an investor and all that, a lot of your large publicly traded real estate and development companies, they're paying 12.99%. Now it's all internal.
Right. Right.
But they're lending themselves money at 12.99, 13% to get deals done.
Right.
So when people say, man, you're paying 14%, I used to feel a little bit some type of way about that. But like, man, maybe I am getting screwed, man. Maybe I need to, But what I found is, they said the big money, the guys are paying 12.99 for those development deals, for
Right.
flippers, or not for 30 years, they're not paying 12.99, but for 6 months, for
Right.
8 months. Yeah,
Yes.
that's what
For a
they're
short
doing.
period.
Short period,
Yes.
short term, yeah.
So, and then I want to just back up a little bit for our listeners. So those who have been following all the Housing Happy Hour podcasts, when we interviewed Jennifer, the lender, she is what you call a conventional lender.
Right.
So she lends to the consumer, the buyers looking to purchase. What Bilal is talking about, a hard money lender or a private lender, and sometimes conventional lending from your local branches. That's when you can obtain an investment loan.
Yes.
Right.
So, and we'll have more episodes on that.
That's it. Absolutely. Yeah.
Well, primarily they focus on investors, people that are going to do flips.
Correct.
They need quick money because you get it in cash within 5 days or 3 days.
Quick.
Right.
Yes.
Right. And the investment, the lending is based on the deal as opposed to the borrow as much.
Right.
And that's why, you guys know, and hopefully the listeners know, you got to do deals in order to build up your reputation with
Right.
the lenders, because they want to know your story.
Right.
Not so much your credit report, not so much how many millions you have saved up in the bank. What they say is, what's the deal? And have you done this before? And what's the chance of you, getting in and out and making it happen? So
Right.
there really isn't an excuse of why not to do real estate investing. If you have the desire to do it,
Yes.
be enthusiastic about it. Link up with the ladies, and they'll help you, earn some money. Because as far as I'm concerned, the only people that make money work in the mint.
Right.
The rest of us got to earn it.
That's
And
right.
you earn it by providing that service. So yeah.
Yes. Awesome.
That's good. So, what did you do from there?
So the flips. So I did the flips, and then what I did is a couple of flips. Another lesson. I thought I was going to flip a couple in Ward 3, right? Because I saw, okay, these have a lot of margin. You're buying a house for, I don't know, 60,000 was really worth 150. I mean, I can flip that. But I learned a lesson: no flippers. Certain areas aren't really, at that particular time that I was doing
Right.
it, that wasn't a flip zone.
That
That
was
was a buy
tear
and hold
down
zone.
and-
Well, not even tear. That was a buy and hold, or
was a
if you
rental
bought, it's a rental. There's a
market.
rental time.
Rental
Yeah,
market.
you
Okay.
buy in that area to kind of. I mean, in my space,
Right.
you buy in that area to for capital appreciation. You buy it, improve it, put tenants in it, and they pay the mortgage down.
Right.
And you maintain it, and then over 7 years it goes from being worth 100 to 300. So now you triple your money in 60 months. You probably
7 years.
7 years.
amazing.
Yeah,
It's awesome.
Did you keep those properties?
I did.
So do you still have those?
I do. I have those properties. Yeah.
Wow.
I have those properties, and then but then the ones in like Sugar Land and in Missouri City and in Southwest, so those are the ones that they were flipped. So they were bought, sold, and we buy them, put a little bit of work into them, and then they're gone.
Right. Right. Okay. So, was there a lesson that you learned during this, from starting at 20 years old to now?
Yeah, I mean, a lot of lessons, but I see the main lesson was go ahead and
pull out the
scroll, man. Yeah, exactly. No, I'd say mentors are important. Yeah. You gotta, because just like anything else, if you want to learn how to shoot a basketball, probably talk to somebody who that's what they do.
Yes.
Don't talk to the guy that is cutting your lawn unless he happens to also be a professional athlete, basketball player. Outside of that, so I'd say a lot of things I've done on my own just because that's how we're all kind of taught, school teaches us, do your test, take your test on your own. It's your responsibility. But then when you get out in this world, you got to listen to people. You got to listen, and take their advice, So I'd say the number one lesson I could say is, get a mentor, work with people. If they're telling you something and they're probably
someone who has the proven success, the proven model, and I would even say the proven system.
Right.
Yeah,
because if you're able to plug into a real estate investment system, that'll also help you. It'll provide the tools and the resources that you need to keep, because it's a business.
It is.
And you need to keep that business organized.
It does. And it doesn't guarantee success, but it mitigates risk.
Right.
That's kind of the only thing we can do, is kind of mitigate the chance of loss. We can manage that, because anything else is kind of, it can happen. You know what I mean? So I say that's the greatest lesson is, to your point, get a mentor experience and have them work with you and move forward.
Show you the way.
That's awesome.
That's good advice.
And what are you working on now?
So now I'm working on multifamilies. I was kind of, think about the old monopoly, right? You buy one house, you do this, and you eventually trade it in for a hotel. It works a lot like that. Even if you don't trade them in, like I say, I keep them, but it's a different place. And so with that, I even have to mentor. So that's what I'm learning about now. Okay. I'm learning about how to, build 100 units, 200 units, multifamilies with parking garages, and learning parking ratios, and say, I want to put 200 apartments there. Yeah, dude, you can't do that because you don't have the space for parking. Oh, no. Yeah, no, you can't do that. So we got to look at ratios for parking. We have to look at what the city's going to permit. We have to look at, now I'm learning about the fact I got to now deal with, not have to, but now I get the opportunity to deal with politicians, because in certain cases you have to, I've always thought, I don't like politics. I'm not really into politics and all that, but
when you get into development and you're talking about putting 100 units in the city or anywhere,
then you start talking to some politicians. You need to learn that world.
Relationships. You need to have relationships.
Yes.
There's other support, other approvals that now factor in, versus you just going after that one house, putting that family in. Now you're talking about, wait, you're trying to put in 100 families?
Yes.
You need to talk to me first.
Exactly. There you go.
So that's awesome. That progress, and knowing that each deal is different, and how do you, put all the pieces of the puzzle together for that specific deal, because it's not a one size fits all.
No, it is not.
So.
And we got to learn. We're all learning.
Reconfigure your business model for each new change.
Yes. Yeah, we got to learn how to do it. So we're all just learning. It's I consider myself a success, because success is the progressive realization of a worthy ideal or ideal. It's a vision that you have. It's something that's tangible that you can see, and it's progressive, right? It's a realizing it is not something I got all the answers. I'm learning. Like I said,
it's not a destination.
It's a journey, to your point. Yeah, to your point. So
something that I think is important for people to know, like in business, every business person has gone through quote unquote failures or struggle or hard times,
challenges.
So what, during those moments, because we've all had them, what pushes you through it? What gets you motivated? Because sometimes we might have a day or a week where we're like not motivated because we're feeling like, man, I just keep hitting wall after wall. During those moments, what encouragement did you have or that pushed you through?
I think just really having your, keep your eye on the prize.
Right.
Because it's going to be, just got to keep your eye on the prize, man. Keep your eye on the goal, because it will, as you run through those negatives. I mean, put it like this: as I sat back and say, when the real estate debacle happened in 2006, 7.
Yeah.
I was doing some what I call luxury real estate, or what we call. I was
you
doing
were in
prospecting, which is prospecting is totally different. So I'd gone from flippers to doing the duplexes and buy and hold, to then prospecting. Hey, look at that land. I'm going to buy that land, and I'm going to build a new home there, and then I'm going to sell that home. And right around that time, I started, man, in 2006, and had a couple of projects going, and then all of a sudden the lending stopped. So we couldn't borrow money anymore. So then the customers couldn't borrow money. So then I was, quote unquote, learning that lesson. So now I'm stuck with all of these homes, and what do you do? I was supposed
So
to
what
be
did you
selling
do?
I prayed real hard, ate my Wheaties, lamented a little bit, but then I got with it, and you just got some support. When I say that,
Right.
you have investors, you have other people that will support you, and eventually we flipped them. I learned about how banks work, how they have to do short sales and stuff like
Right.
that. You learn, okay, we're all in this together, so we're going to have to sell this home for, you're not going to be able to sell this home for X amount of dollars. You're going to have to sell it for this, and then that's going to be a bad mark on you, and it's a bad mark on us. And, you learn those lessons, and you keep
Right.
going down the road. But now, again, that was 2007. We're in 2020 now, so, that's umpteen years ago. Everybody's kind of forgotten about that. I still remember it, but I mean, the banks and the credit bureaus and nobody else, now they're saying, okay, what are we doing now? You know what I mean? So you learn those lessons, and you keep on moving forward.
Which I
That's
think that's
important.
great too, because for the listeners that are maybe the millennials or the generation that's after us, who were not aware of the market crash
Right.
or what happened during that time. So hearing from somebody that went through it and understanding, like, history repeats itself. So, there was the Great Depression and the recessions. And so just being mindful that, speculative investments could hurt you, so just making sure what you're doing, at least starting off, you're doing things in a conservative manner. You have a mentor, you're reaching out to people, just making sure you have that good support system, that if anything were to go south, you guys know that we can lock arms and
Right.
figure this out.
Figure this out, yeah,
'Cause
absolutely.
when things are south, everyone is.
But also maybe your business model. You build your business model that you
Yes.
have a plan A, which is we want to do this, but we also have an escape route. Like, this is what we're going to
Yes.
do when things do go south.
Yes, your multiple exit
That's
strategies.
at least what I have to do.
Multiple exit strategies, yeah.
So awesome. Well, guys, we could go on and on.
Yeah, yeah,
we could
absolutely.
write a book.
Right,
Yes.
right.
But I love this, and I think it was so great for other listeners to hear your experience and the wisdom and the nuggets that you've shared. And is there anything else that you want to leave with the listeners? Any advice, any wisdom, any encouragement?
Yeah, take a listen, I think, to Above the Noise. Yeah, Above the Noise is good, because I think you're going to, a lot of it has to do with the mental attitude. Yeah, it's all an inside job, man. I mean,
Yes.
whether, you're, whatever you're getting into in this particular, we're talking about real estate, is, it's an inside job.
Right.
You'll be, again, you are the success. The money is added to you because you're the success, right?
Right.
Or this, is not so much of you'll, get the money when you become, or you were successful because of the money.
Right.
Yeah.
Your success, and then the money comes to you that's an inside job. That's something you do. So I think it's just working on yourself. If anything, work on yourself, man. Work on your discipline. Have a goal. Be focused. And be confident and enthusiastic. And all the answers will come to you. And I'll be honest with you, it really works, guys, because I could have been in a real bad situation, but I believe because of those principles of what I just said, I hate to use, I kind of skated through.
Yes.
Without any tumultuous, blessed, never filed bankruptcy, never foreclosed on a property.
Wow.
For over 20
that's
years.
Amazing.
Yeah.
Wow.
That's really.
Yep. And done
Yeah.
millions of
Good to
dollars worth
know.
of deals. So, yeah.
That's awesome.
Be sure and tune into his podcast. It has so much information and so much encouragement. Thank you for tuning in to Housing Happy Hour, episode 10 with our friend Bilal. Don't forget to tune into his podcast on all major streams. Above the Noise.
Housing Happy Hour, signing out.